Yo, yo, yo. Welcome to the live show. It's Tuesday, 2 p.m. Eastern. We are here. We welcome all of you in from all over the world. We've changed our stance, Paul. We are now YOLOing most of our money into Tesla. I hear it's a good time to buy. Mo?
Why not? It's always a good time to buy.
Yes.
Well, Mitch here in the show said, when are you guys going to admit you were wrong? Okay, so that's a great question because I don't blame him for asking that question.
I agree.
I've admitted that I was wrong on Amazon. And the reason being is I said Amazon was overpriced, not thinking they could grow to the level to even justify that price they were at, and they've exceeded it. With that said, do I think Amazon is a good buy right now? I don't. I still think it's overpriced. I will admit when I'm wrong when the market as a whole and all the individual stocks as a whole go do what they shouldn't be doing. They all go up and up and up, and the values eventually justify the price. That will not happen. Can it happen on individual stocks? Absolutely. But what you're going to do, Mitch, is you're going to sit there and look at 100 stocks and pick the 2 I was wrong on and the 98 I was right on and focus on the 2 that I was wrong on. And right now, that does look bad. Of course it does, because we're in the most ridiculous market, literally in the history of stocks. I'm okay with that. I am going to sit there and say, if you look at my behavior versus history, it's going to end up looking very, very good. And fortunately for you, you get to go click away the second you realize I'm right in a year, 2, 5 years, and go, I'm never going to talk to this guy ever again. I'm fine with that. I have no problem staying on YouTube and saying, these are my projections for the future. But just like Mitch, I've had people come to me and say, Paul, you were right. What do I say to them every single time? I wasn't right yet. Give me credit in 10 years. So I'm not like those other people out there saying,
I told you so 6 weeks ago.
I told you so 6 weeks ago. I'm going to sit there and a stock could, just like if a stock went down 20% that I believed in, I'm not going to say I was wrong. And if it goes up 20%, I'm not going to say I was right. And that's been very consistent. You'll watch all of our videos when somebody gives me credit.
From 3 years ago.
From 2 years ago, 1 year ago, saying, Paul, you were right. I'm like, no, I'm not right yet. I believe in the long term. I do understand your question, Mitch, 100%. I don't blame you for asking. But it's a little loaded because you're going based off short term, and I'm always talked about long term. And my consistency is saying that when people give me credit in the short run, I immediately say, don't give me credit yet. Give me credit in 10 years.
Mitch is saying it's overvalued. I like this Mitch guy. He does challenge us a lot, and I appreciate it. Guys, we welcome you into the show. We will get into Tesla, all of that. We did a video about our thoughts on Tesla, a very intriguing video this morning that will come out very soon about comparisons to the tech company and that it is, of course. We talked about Intel, a huge fall from Intel last Friday, which we were ecstatic about, and we're going over that. We went over Beyond Meat and what other YouTubers have been saying for the past year and what has inevitably happened to Beyond Meat. We talked about Snapchat today. We went over the Brazilian brewing company Ambev, a lesser known, and we did Lockheed Martin today after their
Paul
huge.
is a gay boy.
Well, I mean, I might agree.
Jersey Nowak.
Gay boys.
I didn't get pissed. I'm not at all. I'm on your side. Paul is a gay boy. That's mature. Why you lie? This guy is full of shit, and you know it.
I'll show that.
Yeah, show that.
Yeah, James.
Listen, I'm not going to hide behind any of these things. I'm never going to hide behind any of my statements about any company because remember, at the end of the day, my goal is to pick a basket of stocks that do a certain thing that I understand. Does that mean I'm going to miss the Teslas of the world? 1,000,000% I'm going to. But I'm also going to miss all these Tesla type stocks that are going to crash to zero or crash very, very low. And you guys sit there and say it's not going to happen. It's going to happen. I just don't know when. And I'm not going to ever hide behind that. I have no problem missing the Amazon, the Teslas, all these hype stocks. I have no problem missing them. The difference between me and other people is I have no FOMO. And I think my results are going to show over long periods of time that I'm the boring value investor who just continually will beat the market over long periods, because that's all that matters. I don't care about year-to-year results. I don't care about any. Look, pull the book. Richer, Wiser, Happier is the book we talk about all the time.
So, folks, what we're getting to is, like, in this book, it describes 12 or 16 of the best investors in the past 100 years, and they all did it by the way Paul and Mo and myself are trying to teach you. If there's a book out there that is somewhat centered around the basis of buying super ridiculously overpriced companies and YOLOing in your money into high growth, pre-revenue companies, let us know about that book where millions and zillions were made year to year, not a full bull market, year to year of YOLOing your money in this type of stuff. And I'd be happy to read it. I don't know if it exists. I don't think it doesn't exist.
Well,
right?
I mean, so YOLOing the money with no process does not work. But I do believe we're going to be interviewing one of the best momentum traders of all time next week, and we'll be posting it. But he has a process. I'm all in favor of momentum. I'm all in favor of hype. Hype is basically momentum. He said in one of his things, Paul, I made a ton of money off Tesla. But he had a process for that. He didn't buy Tesla. He didn't once bring up financials or fundamentals with me in Tesla. And he shouldn't. But that's what I love about that. Like, that's what I want everybody to learn from this. And even though the guys are saying now, like, hey, I just want to make sure this is, I'm glad you bring up the questions. I'm not afraid to hide behind it. I'm not going to hide behind it. I'm not afraid to confront any sort of, even my bad results. I will miss things all the time. But process is what I'm trying to teach here. And I believe in momentum as a process. I believe in charts as a process. I believe in value as a process. But what I believe in first and foremost is process and finding the right process. That's what I love. That's what gets me so excited. Look at Jim Cramer. Jim Cramer's a hype guy. He had a process. What are you looking at?
Oh, nothing. My computer's messed up. I can't see our live feed right now. So anyway, yeah, so you're right. So folks, I would say give this a read. We will, as I announced last, Paul, talk about the announcement. I mean, we'll do two.
Big announcement.
We'll do two announcements.
Well, first the big announcement.
Well, okay, go on. Do the exciting ones first, Paul.
Well, so guys, this is our last Tuesday live stream.
Oh, boy.
And the reason being, our subscriber growth is huge on the channel and our software. And as we've always said, we want to provide more and more value to our software subscribers. So we're only going to do live streams purely for our software subscribers. This live stream is becoming busier and busier and busier, and it's getting harder and harder to manage. And we only have 92,000 subscribers. When we get to 1 million, this is going to be 10,000 people watching at a time. It's going to be too hard to manage. So we made the decision to start focusing more. And you guys have seen it. Those of you who subscribe to our software for only 90 cents a day have seen we're creating more videos for posting them in Discord, soon to be our own chat. We're going to have all these things going, and our goal is to provide more and more value for our software subscribers because they pay us money every month. And we just want to make it more organized. We have the book club. We're going to have more and more content just for our subscribers. So this is our last Tuesday live stream. The Thursday live stream will still exist at 2:00, and it'll be Patreon only. It'll be it's our fireside replacement. And we have our book club, and we're going to do random live streams here and there. Most are going to have his live stream in the morning. Go ahead, Tim. Not just Patreon only. Sorry. Community only. And the community is if you subscribe to everythingmoney.com or Patreon for our software. As long as you're a software subscriber, you will get access to it. This is going to be, and we encourage everybody out there who doesn't have a subscription. Guys, it's 90 cents a day. 90 cents a day, and it gives you so much value, and it's only going to grow from there. Like, as we add more and more things, I mean, look at our front page here.
While Paul pulls that up, I would implore you to look at other Patreon pages from some of these top quote-unquote elite YouTubers out there and what they give you. For $20 or $30, you'd be lucky to get a single Zoom call with 10 to 20,000 people, I would assume, with their huge subscriber bases. We are going live to our community of just our early community who've stuck with us, the first 6,000 of you. We go live to you every Thursday at 2 p.m., a very quaint, small, erotic live stream with about, under 200 people taking your exact questions you've been dying to ask us. We do it every single week. But as Paul's saying, this live stream's starting to get out of hand. And in the end, we're going to do more videos and more exclusive content that you guys have been asking for all the time. So Paul's now sitting at his desk, rattling off a lot of his thoughts, Mo as well, and I bring you some mindset videos, so it's all happening. Tim, what do you think?
So, hey, Ruben just said, hey, I'm waiting till the month is, let's address this.
Do you want to use a mic?
There's a mic in front of you, Tim, that you're live
He's
on.
waiting till the month to sign up for the
Hey, Ruben. So you're saying, hey, I'm waiting till the month is over because otherwise I need to pay the full month for a couple of days. That's true if you were to
go on
subscribe on Patreon. But just so you know, because of Patreon's tax policy, now they're taxing pretty much almost every state. Our friends over in Europe get taxed pretty heavily. Even in Canada, get taxed heavily.
So just go
through
to
Patreon. So we added an alternative.
Yes.
Come to everythingmoney.com. You can sign up directly there. Whatever day you sign up, today is the 26th of October. If you sign up today, 26th of October, then guess what? November 26th, you'll renew. So you won't get charged on November 1st by coming to everythingmoney.com. If you do choose to go through Patreon, November 26th, October 26th, you would get charged today, and you get charged again on November 1st, and we do go and refund that.
Yeah, so please
if you
know
sign
that.
up the last 7 days. So either way, Ruben, we're going to take care of you, just so
Just
you know.
sign up on everythingmoney.com. It's way cheaper, way easier.
Everythingmoney.com's easier, cheaper, and there you go.
Yeah, so make sure, folks, we have loved what Patreon has done for us and vice versa, but if you sign up for Patreon today, they will charge you today. For Bid and Ask, they'll charge you $70-some-odd, and then in 3 days, they will charge you again, and we will refund you, but if you want to stay away from all that nonsense, go to everythingmoney.com, log right in, you can have the software within the hour. So, Paul, another astounding announcement. You just talked about the TurtleTrader. Tell us what's happening in the big announcement with Turtle Trading.
So, guys, we love the complete TurtleTrader book. Seth, I once said he wanted to talk to somebody. I said, just email the person, but then I wasn't doing the exact same thing. So Seth got a lot of success from just emailing people saying, hey, can we talk to you? So I decided to email the best turtle trader that came out of the group, Jerry Parker. And guess what? He agreed to be interviewed. So next Tuesday, we're going to interview him for an hour. This guy ran at one point a $2 billion hedge fund that ran the turtle trading process. The great news is the first question out of my mouth to him yesterday with Mo on the phone was, does turtle trading still work? He goes, absolutely. So it's going to be a great interview. It's going to be an hour long, give or take, call it 45 minutes to an hour. It's going to be great. We're not going to do it live. We're going to record it and then post it on the YouTube. On the YouTube. I sound like a parent.
Listen to you.
On the interwebs.
On the interwebs. So it's really exciting. And the great news is, guys, we have 92,000 subscribers. That definitely was attractive to them. When we have 1 million subscribers, imagine the people who are going to want to be on our show just to publicize themselves, right? And we're going to be able to pick and choose who we bring on the show. It'll be kind of like, it'll be similar to, what's his face? What's the guy's name?
Joe Rogan.
Oh, I'm sorry,
He gets
Paul.
people, Seth's ignoring me. He gets people to come on, and that's what our goal is for this channel. This channel is going to grow into a media business that provides more and more value than just three numsicles like sitting out here just like talking. It's going to be providing a lot more for you guys. So stick with us. Join our software, guys. I'm telling you right now, you're going to regret if you don't join. I guarantee it.
Folks are asking, can we talk in general about a couple topics, which we will. Kiki, I love you. Herman Sanchez just gave $20 to the charity today. We'll let you know what that is as soon as we figure it out. All donations today go to charity, of course. We thought about not taking as many of them, but inevitably some folks keep giving some. We'll do some stocks for you. We will talk, of course, more about Tesla and Intel. And then the second announcement we have, folks, is we've been very lucky in that this has been one of our favorite books this year by far. With that, and of course, taking Paul's Get It Done mentality, I just emailed William Green, the author. He accepted our invitation within the hour, and in late November, we'll have a couple sit-down interviews with him. You will hear from the author of Richer, Wiser, Happier, and his experiences interviewing the top investors of our age, including we'll ask him about his interview with Charlie Munger, which is the last chapter of the book, Manesh Pabrai, which is the first chapter of the book. If you haven't read this, it's incredible. You will hear from him. He's incredible, and he's been very open to talking to our
and Seth and I have both
fans.
reached out to Morgan Housel for Psychology of Money, which I personally believe is one of the best books written of all time.
This book right here,
but he has
folks.
not responded to either one of us.
No, he has not. He's
So if
very
anybody
busy
knows
guy.
him out there, please.
We'd love to have him on the show.
He hasn't even said no. He just won't even respond. So
Okay. Paul, would you like to address, I know we talked about, would you like to address just your thoughts again on Intel and why? Folks, let me tell you real quick, just before we get into our first stock, I am you. I'm still learning it. I've been investing for a while, somewhat poorly since before I met Paul. But on Friday, Intel collapses a smidge, and I see a text going from Mo to Paul, and it just says Paul, Intel, and like fireworks and 100s. Mo, I can't remember the emojis you were using, but pure excitement.
Eggplant.
Now, as a eggplant,
or
sorry.
hearts.
And as a eggplant and peaches. So, and as a dummy, I thought, oh my God, Intel must be exploding. Quite the opposite. It dropped 10%. Why are we thrilled as value investors?
we
Paul
like
and
buying
Mo?
things on sale. If all these cameras and all this equipment here was 10% off, we'd probably buy more of them or half off. It's a different mentality to get around because you're going to see your net worth, what you perceive your net worth to be, going down. What everybody remember is, if you find good value on 20 or 30 stocks and they go down, the chances of all 20 or 30 of those stocks going to zero is pretty much zero if they're well diversified and you're buying them for a good multiple. We want to buy stocks at a good price. I think Intel and other companies that can buy similar to Intel with the same valuations will do much better over the long haul than companies that are out of whack when it comes to value. On an individual basis, they might be very different. But on a whole, I'm trying to buy 20 or 30 or 40 Intel-like companies with the same multiples and the same prospects. Are Intel's prospects the best? No, but guess what? It's so cheap, I don't need good prospects. I just need 2 or 3% revenue growth a year for the rest of time, for the next 10 years, and Intel is an amazing return. I can make 15% of my money. That's the way I look at it. So when Intel goes down, I just think, great, I can buy a great company at a better price. Even a good company at a better price. That's what I want. So that's why we're excited. I like the Intel news because I think it's being over-dramatized. And if you see, by the way, guys, look at Intel's stock price over the last year. It's as low as like 45, as high as like 68 or 7. I mean, these things fluctuate a lot. Don't get yourself caught up in the day-to-day mix of emotions here. That's what we're trying to teach a lot of here. Don't get mixed up in the emotion of it. And it's hard. Took me years to do that, Mo.
Walrus made a good point. He said Intel is a recovery story and has a strategy, and they have to execute that strategy now. I loved looking at what they did when they said on Friday or Thursday, or whatever it was. They had a plan going forward to 2024. They said, we are not going to make as much money. Our revenues are going to be lower. But they gave reasons to why that was going to happen. You don't really see a lot of companies putting out a beautiful 3-year plan.
I have no FOMO, Potato. It's one of the most common things I talk about. Seth has a little bit of FOMO, but he's getting better.
Oh, I was real fired up yesterday.
I have zero
just pissed.
FOMO.
Yeah.
Like literally I go, okay, listen, you want me to give you an exact example of no FOMO? I almost bought a piece of the Miami Heat 12 years ago, 13 years ago. I bailed in the deal with 2 weeks left.
Tell them a story.
I was buying a piece of the Miami Heat 13 years ago. The deal was all set to go. Money was all set. I bailed the last second.
Prior
2
to
weeks
LeBron
ago,
leaving.
Prior to LeBron going to Miami, prior to him leaving Cleveland. I said no because of a document that showed up at my door from the majority owner. The document never ended up happening. I bailed in the deal, never ended up happening. That piece today would be worth 50 to 70 million more than I paid for it. Zero FOMO.
Come on.
The reason being is I look at it going, if I had 100 of those situations, one wrong situation could have bankrupted my partnership. That wasn't worth it to me. I have zero FOMO on that. Zero.
Well, I have plenty of FOMO, and I'll tell you why. So Mike's side.
This channel wouldn't be happening probably if I'd done that deal, by the way. Think about it that way also.
How many people we've touched?
No, this
Fondled?
deal, we would not be doing this channel.
I know, that's what I mean. How many people we've fondled since...
Yes, correct.
Mike Sai says, I'm a big fan of your channel. Recently been ridiculed by all my friends. Mike, I hear you. I go to parties, talk about Tesla, and people blatantly laugh in my face about not buying Tesla at 700. Based on your value investing approach, I don't regret it. Congratulations. Can you elaborate on Tesla stocks? Folks, let me give it to you straight, and Paul can elaborate on this. I got to thinking about this. I had 140 shares of Tesla. It would have been up a lot of money. And I sold when I thought it was ridiculously high. This was $900, the old $900, prior to the 5-to-1 split. Now it's over a $5,000 stock. It went up today, and they're going to split again just to fool you guys, to make it seem like it's lower and lower. But in the end, one car company / tech company, one car company and is not going to change the process that I've learned from all of these old rich dudes. It's just not... That's what I have to keep telling myself, Paul. It's like, we hear comments like this, Mike, I appreciate your donation. I know it's tough out there. We look like idiots. Listen to the other YouTubers. We look like complete fools, but someday it will switch. Am I right, Paul? And they will look like idiots.
You know, I believe that. All of history has shown that it'll eventually happen. Going back hundreds and hundreds of years, guys, markets have been around for a long time. The first ever bubble was the Tulip Mania, the Dutch Tulip Mania, and then the Indian South Sea Company or something like that. It's just different characters, but it's the same plot every single time. You know, I had a money guy from Chicago in. We were playing golf last week, and he said, well, Paul, you know, I understand you make a lot of sense, but I just think the technology is different. Technology has evolved and blah, 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 and markets are different now. Markets have evolved. I go, so it's different this time. And he laughed. He goes, no, it's not different. I'm like, yes, that's what you're saying. It's different this time. He goes, no, I just don't think right now that this is more like, I'm like, so it's different this time. And we can change the words all we want. And the great news is, guys, the hype could continue forever. I can still do well buying the stocks I want to buy. But just think about a world in which every asset price goes up and up and up forever. Does that even make sense? We have no cycles anymore. That's like always being happy. Is it possible to always be happy?
If you're high.
No, even then, though, you come crashing down.
There's sad highs, Mo.
Seth.
But that's the point, guys. I know we don't understand. Listen, I was in the same boat as everybody else here in the late 90s. I was like, no, technology is different. The world is different. It's easier to make money now. We should pay higher multiples. Guess what? I was wrong.
Go ahead, Mo.
What did I tell you yesterday a bunch of times? I said, it's the same narrative. It's just coming in a different form. Because you said, but now maybe it's different because we get information so quickly. And I said, yeah, but it went from You made the point about newspapers one day, and I said, but before newspapers, it was 1 week to get news because they had to write it in on a donkey. Then it moved to 1 day. Then it moved from 1 day to one.
Well, I told Mo, like, maybe Warren Buffett slated in the past because it was much easier to find low-lying companies that no one ever heard of.
It was, but I will say this. That's what makes me believe that the downturns will be worse because the upsides are higher. Because when we had the bad times, people look at COVID. That was the fastest 40% crash in the history of the world. Mm-hmm. In the history of the U.S. I think social media and media had something to do with that. Why? Because just when the up is so good, the down will be even worse. It'll make people go even more dramatic. The last crash of 08, 07, Twitter was barely a thing back then. I was still getting my news from watching TV. Remember that, Seth? I was still watching CNBC to get the news. Now we see people literally on a week-to-week basis, day-to-day, hour-to-hour basis affecting stock prices by tweets. Elon Musk tweets something, this thing happens. Guys, think about it this way. This is something I saw on Instagram today that I put in the chat. It's from the account, The Intelligent Investor. $1 trillion Tesla. This is the gross profit of the 6 companies that hit $1 trillion. When they hit $1 trillion, there's a gross profit. Tesla is $11 billion in gross profit. That's 100 times, 90 times. Microsoft was $77 billion. Facebook was $85 billion. Google was $89 billion. Apple was $98 billion. Amazon was $120 billion in gross profit.
Wow. Tesla
was $11 billion when it hit $1 trillion in market cap.
Yikes.
Come on. I mean, seriously? Is that what we're talking about here? Like, we really have to sit there? It's 1/7 even the next lowest number? It's 1/7 that number. I look at it going, this just doesn't make sense. Everybody says it's a tech company, yet all of its margins and all of its revenue comes from cars. The margins on their cars are just like other car companies, within a few percentage points. We've got to at least take our step back and say, $1 is still $1. Wherever it comes from, it's still $1. Does that mean that we pay the exact? No, we can pay different multiples based on how easy or hard it is to grow that money. I absolutely do believe in that. I will never stop believing in that. But it's still $1 of revenue, $1 of profit, $1 of cash flow. That's the way I look at it. Can I be wrong? Absolutely. But at the end of the day, every investment is the present value of all future cash flows. So what I'm trying to do, my goal is to buy the most predictable cash flows for the cheapest price I can. That is my goal. Because every cash flow in the future is the future. If one is the same for 10 years and another one's growing at double the rate, I should be willing to pay double for that double the rate one. But it doesn't mean if I pay $1 for the steady one, I'm making a worse investment. No, I'm making a better investment because it's still taking the present value of all future cash flow. It's about what are you paying today for that future cash flow? That is what matters.
Wow, that was well said.
Well, thank you. And Elon Musk grew his net worth today by $36 billion, I read. It's kind of epic, isn't it?
Pretty awesome.
Again, folks, if you're just joining us, we do a full video on Tesla, our thoughts on Intel. We talked about Beyond Meat. We talked about Snapchat today. Ambev is coming out in the very near future, and we looked at Lockheed Martin and their recent crash after earnings. As always, Mo always says, be cautious around trading on earnings because anything can happen, including great earnings, low price, and low earnings, great price.
Yep.
Or especially if, also be careful if a company like Hertz with no money to buy cars says they're going to buy a bunch of Teslas from a company that can't make their own cars.
I'm just so
be cautious of
by
that.
I'm just so perplexed.
Paul, we did get a couple requests here. Mike Sy, we appreciate.
I thought we weren't doing stocks today.
Well, someone said, "Can you cover ramp?" So,
by the way, James Westy made a good point. Growth is only a factor to consider in assessing value. Problem comes when people think growth and value investing are different. Exactly, James. Growth is an aspect of value investing. It always has been and always will be. But what we have in the markets now is people differentiating growth and value as totally separate and mutually exclusive things. They are not. They are, as Warren Buffett says, he thinks saying investing and value investing are redundant. Investing is about paying the right money, the right amount of money for some sort of future value. That's all you're doing with a low risk of permanent loss of capital. That's what you do when you invest. When you speculate, you're buying with a high risk of future capital loss, permanent capital loss, and without some sort of process for buying. That's the way I kind of look at it. There's no process in speculation. Because even momentum investing, which doesn't care about the fundamentals, I don't think that's speculation. I think there's a process there, and that's what makes it more foundational and better. Same with charts. There's a process there. As long as you stick to the process, you're not speculating. Once you deviate from the process, and that's one thing I differ with Ben Graham and Warren Buffett. They believe an investment is about a future, like basically look at the cash flows in the company, what can be lost. I look at it as a process. To me, it's a process.
It's like making, as we talked about, like baseball hitting. It's like the very next pitch, your next play. Stop worrying about the overall value. Just keep making good decisions.
And you adjust your decisions based on what you see is happening, right? So the same way is like, if there's a guy on third, the outfielders are going to play a little bit different than if there's a guy, if there's nobody on base.
Sure.
Correct? Same thing here. I'm being more cautious by saying, hey, wait a second. People are paying a ton of money for these stocks. I'm just going to stay back and wait. There'll be a time when I'm a huge advocate of Google, Facebook, Amazon, and even Tesla. There will be a time when I'm like, you got to buy these companies. People say, but Paul, 10 years ago, you said they were sucky. Yeah, they were also 100 times more expensive.
Yes.
Of course they were sucky.
So my Model Y will be in my hands next Friday for a pickup. And Mo, your car is still coming in November.
November 27th to December 17th.
If you're in the Everything Money community or on our Patreon, you're automatically entered in our Tesla giveaway. Paul, we're about 8,000 subscribers away from handing someone a brand new Tesla Model 3.
7,600, 7,550.
That's right. You are automatically entered if you join the community. So we will be giving away a Tesla in the next 30 days. How exciting. Boys, I think it's time to talk about Facebook, down 5% today. So many comments are asking, is this puppy on sale? We talked about last week how, bad news is great on our end. If you want to get into a new position on a company, we love bad news that we think is just that, Mo, just sort of bad news and bad hype. So give us your thoughts, boys, on Facebook.
I think I said I wanted Facebook at 300.
Yeah, you did.
Yeah, so we're getting close, guys.
Yeah, we're getting really close. I mean, I was looking at Facebook and what they did, their earnings and stuff, and they're mostly just focused on their usership, just remains stagnant. I mean, with all the issues that they've been having with this whistleblower and this blower and that blower, it's
who's blowing whom?
Oh, Paul.
Who knows? But
the
point that the future that I foresee as an issue for them is the iOS issue, because Apple's really into privacy and they're a little bit less into privacy. So Apple wants to kind of like get rid of their app. They're not saying it, but they kind of do. So that's the only risk I see going into the future.
Do you really think Apple's getting rid of the number one? No. I don't think so either.
No, I don't.
So guys,
I think it's going to be a little more turmoil, but they're not going to get rid of the app.
Look at this. How many weeks ago was September 7th?
6, 5,
6 weeks ago? 382.
Wow, look at that.
312. That's $70 lost. That is 1/5. That's what, 18% of their market cap gone in a matter of 6 weeks.
And just for you, those of you that don't know, F is the F in FANG. So one of the FANG stocks, minus 18%.
Now,
it happens.
What we're going to do here is we have a situation that's being involved with a story. What's that story? The story is Facebook has had this whistleblower come out. I'm a big believer in I'm going to wait a little bit on Facebook, only because I want to see how this plays out. But if I still see revenue growing, profit growing, cash flow growing, because they're still a fast-growing company in terms of revenue and profit, let's let them see things through. It might be a situation where people are just getting crazy about the story and exaggerating how bad the news actually is.
I'm not worried. I'm worried about Facebook's growth. I'm hearing stats of how young people in waves are jumping off and moving forward. Massive drop off. They're
on Facebook itself. I don't think Instagram. I don't think it involves.
It's Facebook itself. The good news is they have Instagram, which seems to be growing.
I see, of course.
Instagram is very popular amongst the kids.
And WhatsApp is very popular amongst the foreign people.
Before we get going, I want to make sure if you are in the Bidnass Nation or the top tier levels of our community, we just put out a trading chart setup. If you've had trouble setting up your charts, just like Mo does them over there, a new video just came out in the Discord community, and so make sure you check that video out about how to set up your trading charts, because someone asked about the %K smoothing indicator, and it's all in that video. So give it a look.
So this is exciting times. And as time goes on and stocks are going down for no reason whatsoever, or they're going down because revenue and profit's falling, but more exaggerated than it should be, this is where we're going to do a lot of learning together, guys. It's no coincidence. Big down days in the market, we get a surge of followers, we get a surge of watchers, because people want an explanation of why it's happening.
Surge in my pants, really.
Yes, a surge in my pants as well. People want explanations. And if the market falls 50, 60%, which is not unreasonable from these levels. We're going to be there to hold you and say, it'll be okay, my child.
Fondle
It'll be
us.
okay, my child. We'll be fine. Because remember, revenue and profit can still fall, but usually what happens in the markets is they fall worse than they should be. And I'll say to you guys, the stock is down 70%. Profit and revenue are down 10%. Is that a reasonable is that a reason? But it'll be hard to sit there and see the stock going down and you saying, I want to buy more. And buying more and more.
Bruno and a couple other folks are saying that Facebook announced that it'll doing a $50 billion share buyback. Mo, is that true?
I don't know if I like that idea.
That's what I've heard. That was the rumor this morning.
Francesco, we did do Lockheed Martin. A video will be coming out in the next couple days. Jonathan, check out the new video in the Bid and Ask Nation.
$50 billion buyback would be, what is that? 100? How many hundreds of millions of how many millions of shares is that? So 50 billion. Divided by 312, 160 million shares. That would buy back about what? Oh, okay. About 7% of their, okay. Listen, I still think the stocks, I want them to be buying back on the way down, like literally on the way. When they announced it in yesterday's earnings?
Earnings call last night.
That's good. I mean, guys, this is a great balance sheet company. Look at this company. They've got $80 billion in cash on hand and liabilities of $32 billion. That's maybe what they get with their $50 billion. Like, might as well use our cash. And they're generating cash flow. They're generating cash flow of, $30 billion and growing every year. Wow. So, guys, this might be a prime example of something that we want to sit there and attach ourselves to at some point and dollar cost average into. But it'll take patience. Who knows what could happen? This could become, guys, it would not be unheard of for this to become a $150 stock at some point.
Facebook?
Yeah. So you got to be patient and say, I'm okay buying it. 300, 270, 240. It's okay to do that. It's hard, but every time you do it, just remember my average cost is lower and lower and lower. That's what I'm doing with Intel. I'm trying to make my average cost lower. And that's what I'm doing for every one of my stocks.
Yeah.
The biggest example was Southwest last year. I bought at 25. I thought for sure it was going to go to 15. It literally went from 25 straight to 48. And I was just like, okay. So as an investor, your goal, especially if you're younger, is to buy more and more shares of a company at an average price that is lower and ride it out. And I think Facebook, as boring as it may be, there's enough Karens in the world who want to be on Facebook, sharing recipes, talking about their neighbors, talking about politics. There's plenty of that. They need a voice, and Facebook is their voice. And hopefully Facebook will take some of their $32 billion in cash flow last year and rebrand and change the way they're going to do things. But guys, remember, Microsoft was trying to be split. The government was trying to split up Microsoft in the late 90s. They survived that. Now they're one of the most valuable companies in the world. And Microsoft was going to be split up because of there were literally emails from Bill Gates saying, how much do I need to pay you to get you to stop using Netscape? First off, who here remembers Netscape?
What is it again?
Exactly. I remember Netscape.
Mo, Tim, is our jump to the Bid and Ask still, our trial membership for the Bid and Ask, is that still viable?
Yeah.
Mo, will you explain it real quick?
Yeah. So if you want to jump into the Bid and Ask for a month, you have 30 days to do it. So you have 30 days to move up into the Bid and Ask Nation. You are going to pay for that month. Mm-hmm. And if you do not like it, which you probably will like it, you have to email us, help@everythingmoney.com, to go back down. This is on you to decide if you want to stay there. So you have to take responsibility. If you want to go back down and get to your same price. So if you're paying $28 right now and say November 1st you go pay $79, you will go back to $28. But it's on you to email help@everythingmoney.com and jump into the Bid and Ask Nation and learn about trading for a little bit and see if you like it.
Paul, we get this question all the time. Derek says, I want to get out of Dogecoin. I'm down 35%. What do you recommend selling?
So if you want to get out of Dogecoin, you log into your account.
Yes.
You hit sell and you're out.
Guys,
what you're saying is you want Dogecoin to go back up and then sell.
I sold Bitcoin live here on the show. I sold Tesla. It's a tough move to lose some money on something, but you have I'm guessing you have a long life of investing, and true point here is I just feel better on a daily basis not knowing that stuff's going to go up and down. Or Paul, we do have a stock request. Can we look at it real quick?
Yes.
This is from Akshat Shah. He's looking at RAMP. The ticker symbol is RAMP, and this is Live Ramp Holdings. It's a United States-based tech company, provides identity platform leverage by brands and their partners. Yada, yada, yada. Let's look at RAMP real quick, and we'll get back to your questions.
$3.6 billion market cap. A lot of X's here. They're buying back shares. I don't know with which money. Income statement, revenue growth, pretty solid. Profit growth, they don't like profit. They had one big profit number of $1 billion. Something tells me it was a one-time. Yeah.
Can you blow up your screen just one pop, Paul?
This is the same level it was before.
Okay. Oh, that one's real.
Well,
nice.
the problem is it doesn't, but then
Okay.
it can,
Sorry. Go on.
it's okay. I mean, how bad is it?
Go ahead. You're fine.
Are you sure?
I just think on a phone, it's probably not existent out there. Let us know, folks. Keep going, Paul.
This $1 billion in profit here doesn't even make sense. Okay. Shares outstanding. Good for them. Buying it back. Cash flow, guys. Let's go to the cash flow. Negative, 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 positive. Yeah, I'm just ignoring this. I mean, I hate to be rude about it, but I look at this going 3.6 billion.
Go on, baby.
Yeah, I don't know. For what? Net income of a loss. They've lost money lately. Good gross margin, 69%.
Wow.
This is like, to me, this is just a company that I just go, I look at it going, I don't like it, doesn't feel good to me. Remember, I like to find consistent companies that I can project out earnings for the next 5 or 10 years. I can't do that here. It's all over the place. So to me, it's kind of difficult. One year they make $1 billion on $300 million in revenue. I don't know how that's possible. Another year they lose money, et cetera. So it just makes me feel uncomfortable. What's the next one, Uncle Seth?
We don't have any more at the moment, but that's okay.
Oh, I see 2 donations.
Oh, one one was about Tesla, basically asking about Tesla.
Oh, okay, gotcha.
John, again, going back to Mo and upgrading to the bid and ask. If you guys do all this on everythingmoney.com, there are no more Patreon double fees. So again, if you join Patreon today, they're going to charge you the $70 whatever, and then in 4 days they're going to charge you another $70. That is out of our control. They do it and they screw everybody, and we know it. If you join Everything Money, you're on a monthly month like Netflix. So you join today, you pay your money, and it's just revolving every 30 days. Go ahead, Paul.
Johnny Internet has a question. On Amgen stock update a few months ago, Paul mentioned PE replaced by another a pillar. Why do you still use PE? I changed the PE from a 1-year PE to a 5-year PE. So great question. Thank you for asking that. I'm looking at a longer term PE now, not just a 1-year PE. So I did change the PE in the sense of I stopped looking at 1 year and looked at 5 years, and stopped looking at less than 20 and looked for 22.5. So great question.
Achu is asking, investing in SBY, he says dollar cost average or lump sum investing? What do you think?
Whatever you feel comfortable with. But if you have one big chunk of money right now, what I tell people to do is select 2-3 years and every single month buy the same amount and dollar cost average that way.
I jumped in all at once, Paul.
Yeah, I understand. It depends on the strategy you're going to do. And if that's fine for you. It doesn't matter to me. It's whatever you feel comfortable with. My personal opinion, I would do dollar cost average over 2 or 3 years, especially with where the market is today in terms of valuation.
Yeah. Who was saying this?
I'm Tom. 5-year PE is unfair. No, it's not unfair. It just for faster growing companies, you just have to be very cognizant of the fact that this is a fast growing company and you should assign a higher PE to it. Remember, these 8 pillars are not to sit there and say this is the Bible. It's to sit there and say, let's look at an overall picture. We're not going to look at a slow growing company the same way we're going to look at a fast growing company. They are different. So that's all part of it. But if you're looking at an Intel versus a Tesla, you would assign different multiples to them because of their growth levels. That's 100% fact.
Paul, it has been 40 minutes since we started. Can you make sure you're very clear on, since we buy so few stocks on this channel, William wants to know your confidence in Intel, just real quick, fellas.
My confidence in Intel is every stock I buy, I say, if I owned 30 of these, would I be happy? And if the answer is yes, that's what I'm happy about. Don't look at individual picks. This is a big reason, guys, why I stopped talking about the individual stocks I own. But now that I have 13 stocks, I'm going to show the portfolio. And I have a lot of options. I look at every individual company, I still believe in diversification for myself, but my diversification is based on my valuation metrics. So I look at Intel, I look at Smith & Wesson, I look at HPQ, I look at Walgreens, I look at Herman Miller, I look at 13 companies and I say, I like these companies as a package. A few of them are going to do well, really, really well. A few of them are going to do crappy, and a lot of them will do in between. That's my goal. Never look at my individual purchases and say, oh, Paul likes Intel, therefore it's about Alibaba. My biggest position is Alibaba. If I knew the future of Alibaba, if I knew the future of everything, I'd put it into one position, but I don't. And I'm not willing to do the research that Warren Buffett's willing to do and my friend Gary Masher's willing to do to only own 7 or 8 positions. I want to own 20, 30, 40 positions that fit my criteria that work. And over long periods of time, I will do better than the market. That's the way I look at it. And the other thing is, guys, I'm also not buying smaller stocks because I sell options, covered calls on my stocks. That's another reason why you shouldn't mimic my stocks. I'm willing to do bigger companies, and bigger companies that tend to do worse in the market than smaller companies. So that's another reason not to emulate me completely. There's so many reasons not to, but that's a big reason. Don't look at an individual pick as, oh, Paul is right on Intel. No, I believe in Intel because if I had 30 or 40 other companies like Intel that had the same idea, same valuations and same future, I'd buy them all.
Crunchy Socks McGee, Paul says he's 21. Is investing in ETFs better than individual stocks? You would say probably yes. You need it.
100%.
Yeah.
Take 10 or 15% of your money, do individual stocks when you feel comfortable, but the rest of it all goes to ETF investing. I think it's our highest ever. 832 is our highest ever
I didn't know that.
live
That's
at one
nice.
time.
Yeah. Oh, wow. Paul, what is your ideal portfolio size? That's an interesting question.
I don't know if I understand the question.
I don't think I do either. Randall, rephrase. Any updates on momentum trading software? This is going to be huge, Paul.
It's going to be huge. It's going to take some time, guys, because it's got to be really figured out. We're starting it in early. We started already, but we're going to start working on it more thoroughly in early November with a dedicated developer. It'll probably be a few months. When I say a few months, first quarter of next year it'll be done. End of first quarter, early second quarter, because we need to make sure we get it right. We're going to back test a lot of things to make sure things are going great. And especially with the conversation with Jerry Parker, he was very clear, like back test your ideas to see, because he would give us some advice on some back testing ideas. That's what we're doing.
I see some old fans turning on us, Paul. When we take away the live streams and then give our paid users tons of exclusive content, people get upset, of course. So
What was that?
We've been saying for a very long time we're going to do this, guys.
yeah, that's true. In fact, you were asking
Nothing
for
new.
it. Now when we give it, of course, it's bad. So
Well, who's upset about exclusive content?
oh, like
Non-subscribers of the software?
no. Like let's not talk about it. We're fine. There's a lot of people that
Yeah,
still
it's
love
probably,
us.
listen,
here.
if you're
a
guys, I get
subscriber,
it.
nothing's changing.
If you're not a subscriber to the content of this is not going to be fun for you. But
Sorry,
remember,
it's not free anymore. Yeah, that's it.
guys, remember, we're trying. We want to give more to the people who are paying us. Just like everything in the world, if somebody was paying you and somebody is not paying you, who should you give more attention to? The person who's paying you.
Yeah, I guess
You don't go pay attention to your neighbor's boss. You go to your boss and say, "Hey, boss, what do you need? You're paying me."
I guess they want the three of us in the room on camera, the 5 of us behind the scene, the developers, the hundreds of thousands of dollars of fees. They want us to do all this for free, Paul.
Last month, I spent over $105,000 running this channel
How dare you make money on
in
this?
costs. $105,000 running this channel. I'm going to dedicate it to the people who pay me the money that pays that fee.
That
That's
bill.
just the way it is. And guess what? If I only had 30,000 people who watched our channel, but they were all people who bought the software, I would be the happiest guy in the world, because I want to dedicate it. I want to make the software more and more valuable to the people who are paying us on a month-to-month basis. And that's going to get better and better every year. Guys, forget about 1 year from now. 1 year, 3 years, 5 years, 10 years, 20 years, this is going to be even better. If you don't want to pay the 90 cents a day right now, I get it. But when it's $1.50 or $2 a day in a few years, you're going to regret that, in my opinion.
Susie says, literally every live stream, Paul burps. Love that Coke Zero. How funny.
It's not a burp. It's just like a hiccup thing. I actually can't burp on command. Do you know that?
I don't think I could either, maybe. Mo, can you do that?
Burp on command? Like
Yeah.
swallow air? No.
Can't happen. Why is everything money so...
Well, Susie, we go to lunch beforehand, and I inhale like 4 Diet Pepsis, and then I also have a Coke Zero.
Paul, why is the Everything Money software going up in price?
Because I want people to get in early and stay with it. Because remember, when the price goes up, your level stays the same. And we're adding more and more for that software as time goes on. So I'm rewarding those who got in early and earlier. And I also, as we provide more and more value and provide more to the software, it should go up in price. I'm trying to be not Ferrari, not Chevy. I'm trying to be BMW and Mercedes. I'm not trying to be Ferrari with Bloomberg and Y charts. I'm trying to be Mercedes. I'm not trying to be Yahoo Finance, which, by the way, we're actually cheaper than Yahoo Finance. We provide way more, but I'm not trying to become the cheap provider or the most expensive provider. I'm trying to provide the most value. I'm trying to be Dell Computer.
Oh, I'm sorry. I don't want to mislead people. If you have pledged a Patreon in the past or joined our software, your price is not going up. Someone's asking why our pricing for new members goes up every month, and so we want to keep that community tight and small. So this is no. Your OG Husky, I see you, brother. Your OG $8, Paul. The software used to be $8. Imagine those people.
Well, remember when it was $8? It was $8 because we hadn't created the software
That's
yet.
right.
I said, guys, you know what? If you want to basically finance my creation of the software, which by the way, I think we spent $200,000 on that alone, but I was like, I'll give it to you for $8, and we sold out. So my goal, guys, was to have 725 people buying our software by the end of 2021. We have 6,000 currently.
Yeah, it'll be 7,000, not 700.
Yeah, it'll probably be 7,000 by the end of the year. And not only that, guys, forget about that. The software is already bigger than the software is already better and has more options than we originally thought we were going to do. We're going to have Y-Charts spends over $1 million a year on software. We are currently spending $250,000 a year on software, and we will provide more than that. And they have way more revenue than we do. That's the point. We're going to have options on our software. We're going to have...
Yeah, Rocky's asking about technical analysis and charts. Rock, we're getting there. This software is only about 7 months old. It only went live April 15th. That was early. We were telling you later than that, so we went early on that. And as the revenue keeps generating, we'll put more money in. Developers work nonstop, and not nonstop, but I mean they're working very hard to get you the greatest software we can. So, wait. Paul, sounds like everything money's disruptive, but William, I got the disruptive bell, not Mo's. I brought my own disruptive bell, so we'll be ringing it to make sure that we stay.
Derek says one day, hope you guys can interview Mesh per bride. That'll be lit. I hope so too.
Yeah, that'd be nice one day. We'll see. Okay, guys. You guys are hilarious. Mo, any update with the trading over there? What's going on? Any great trades? What's going on with you guys?
Well, the one thing I like to point out is with the Lockheed Martin that happened, I always say don't trade on earnings because you never know what's going to happen. Look how close this was to being a great trade in the employed trader series. This thing was moving up very nicely through the sweet spot. I said, guys, let's get through earnings, and then today they're down 12%. So this is definitely going to turn down on us. But this is why you don't jump in on earnings, because it is a total crapshoot. They missed sales by a little bit. Intel, same thing. Not that bad, especially looking forward in the long term. Who else? Facebook. They're getting hammered. They shouldn't be getting hammered as much as they are, I don't think. So earnings are a total crapshoot. We saw last week. We saw Tesla came out and reported very good earnings, and they were down pre-market. So
there you go.
And of course they're not now.
Vari is saying he's a non-subscriber. He can't pay for the private subscription, but he likes what we're doing. I would say we're going to do more videos. So this is going to be the last live stream that we do. We're not going to take a vacation, folks.
8:69. A 1 p.m. video will replace it.
So we're going to do more videos, cover more topics. And so instead of a 2 p.m. live stream, we will do a 1 p.m. video that's really honing in on the individual stocks. And of course, all you community members, we are doubling down even further on how much we enjoy our Thursday live streams just for you. Exclusive community-only live streams, about 200 people asking questions, and Paul goes off the rails. He curses. We talk about our Paul's sex life, which is very spicy at the moment. And so that is 2 p.m. Eastern for the community members. Keep going. So anyway, I cut you guys off. Okay. So, here they come.
Okay. So Albu keeps saying we're losers. I keep showing his statement.
I think
so angry.
I think we are. So yeah.
3 fucking losers.
Why is he so angry?
Yeah.
Why'd you delete it, Mo?
I don't know. I don't want idiot like
Well,
that.
I don't mind. Listen, I don't mind it.
No,
he's
because
a
you did
moron.
it 3 or 4 times. Other people are trying
He's
to
a
play it.
moron.
All right, let's keep going, guys. Everyone's asking about this shirt, Paul. I have to say that
What, your shirt?
It's not that he said it, Paul. It's that he spammed us. That's what pisses me off. I
it's
hate
good-
when people type the same thing over and over. Guys, we can read. You don't need to type the same thing 4,000 times in a row.
Well, it was also not showing.
I know, but I saw
Listen,
it
I don't mind when
multiple
people
times.
do that stuff because I look at it as going, what are you proving by calling me a loser? Did you win? You won. Okay, sounds good. Have fun. I don't know what to say besides. That's what's been great about this channel, by the way. It's made me a lot more thick-skinned.
it has, yes.
Right? You're just like, all right,
You used to go apey on people.
Oh, yeah, now it's like, all right, sounds good. I still get 8B on the YouTube channel people, though, because that just drives me nuts.
Look at this tweet from Elon Musk. He said somebody wrote that they got the 100,000 card delivery or order or whatever, and he said that it's strange that moved our valuation. Tesla is very much a production problem, not a demand problem.
Come on.
He's phenomenal.
At least he's real about it.
At least he is.
Too bad the stock buyers are not.
Logan keeps asking this question. This is what Mo hates. If Paul's naked in the members only stream, I'm in. That is true. So Logan, it's not that I don't like mining stocks. What I'm saying is whenever a company drives its revenue and profit based on the price of a commodity, just make sure you look at the price of the commodity relative to history and watch those fluctuations and look at a longer term outlook of that. I have bought oil stocks. I've bought mining stocks. I own GDX and GDXJ based on my prediction of where the prices are based on where I think they're going to be in the future or based on history. That's all I'm saying. I don't think they're good or bad. It's just a matter of figuring out where they are in perhaps a cycle. That's it.
Yeah, people said don't do naked streams. I will be doing a bathtub stream very soon from Paul's new tub in the mansion. And yes, Paul, I think this is what is this shirt from, Paul? Can you see?
Oh, let's see here.
You know, I get this flowery.
Oh, Abercrombie and Fitch.
Yeah, Abercrombie. My wife bought me these shirts.
I like
I'm
girls
slim and fit now. I'm down
like girls that
25
wear
pounds.
Abercrombie and Fitch.
And by the way, so before the new year, I will be down to my 40-pound loss. We will reveal it on the show, and we will have an official weigh-in where I'll lose my 40 pounds. I'm very excited about this. So, Paul, thank you for guiding me toward doing this. And Bruno, we do have Paul's new house tour up. Paul, let me know if we want to release that house tour.
You know, the problem is the house is naked. It doesn't have nothing on the walls. It's an ongoing thing. It's kind of been a bit of a frustrating process for me, but yeah, you can do whatever you want, Seth.
Okay.
Actually, no, that's not true, but you can do that one, I
hear
think.
you.
Good job clarifying.
Be for your patrons too in the future. Dark Knight. Will your videos be for your patrons too in the future? Yeah, folks. All of our exclusive videos will go to the existing patrons and the Everything Money community, kind of one and the same. So
we do it now. Like, you know, I record several per day. Seth and Mo do the same thing. We put exclusive content, shorter videos that are more to the point because you have so for example, when we do the 8-pillar process for YouTube, I'm explaining every pillar every single time. When I do it for a few good minutes, as we call it, I'm not doing that. Why? Because you guys already know it. You've heard it 1,000 times. We go right to the 8 pillars tab. We look at things. It's 3 to 5 minutes. I talk a lot about mindset. The book club's about all these things. The software, when you remember the software, you can get a lot more exclusive content that's a lot more efficient because we don't need to explain things over and over to you.
Shaban has a very interesting question. If you're interested in a new company without a proven history of fundamentals, financials, or sales, they call these pre-revenue, how do you safely determine risk, Paul? This is one of a big point of ours.
I don't think you safely determine it, and therefore that's why I avoid it. I'm not a guy who understands that very well. A lot of people out there are. They tend to be venture capital guys. I'm not one of them. So I like to see it's much better for me to see an established business or a business that I see the consistency of growth and consistency of profit coming to fruition or already existing and growing, that I can determine how it can grow from there. When it comes to pre-revenue, it's a shot in the dark. Like you guys, we talk about everything money. Tim and I talk about revenue all the time. I still talk to him about, okay, well, what happens if this happens? We're still a young company. We're cash flow positive, which is great, but we're still a young company that's still trying to figure out their way and figure out how we can increase our revenues over time. What we've determined is our driver of revenue is the software. So we need to put as much into the software as possible and provide as much content for the software as possible. That way people value the software more and more and more as time goes on. It's just like Facebook. We want you guys on the software for everything financial as time goes on. That's it. So the same thing there, but pre-revenue, if you told me to value everything money pre-revenue, I'd been like, I have no idea. Why? I don't know if we're going to have I thought we were going to have 725 subscribers by the end of this year. We have 6,000 already, and it's October 26th.
Graduate is saying he's having trouble getting off of Patreon and onto Everything Money. You can always you can always email help@everythingmoney.com and they can assist you. I'm guessing you just log in, but Nick can certainly assist you if you have problems over there. Or Graduate, if you're in the Discord, you can email me if you need help. I mean, we're here for you guys. I'm sorry, you can message me. Let's see. Mo, are you seeing anything sexy over there?
Not really. Just a lot of funny comments are rolling in here. How do we see exclusive content in Discord? It goes out in the EM community announcements.
Yep.
In the Discord tab.
And if you're not part of if you're not a member of Discord, we recommend just joining it, mute every channel, just to be able to get those a few good minutes. It's well worth it, guys. Mute every single channel. Just mute it all. And then when you see something open on the A Few Good Minutes and the EM exclusive stuff, please click on it. It's well worth it because the videos are good. And I like just sitting at my desk and providing a 3 to 5 to 6 minute video about what I think, and it can engage people. Tim.
They are a community member right now. If you're a community member and you aren't on the Discord community, don't want to be on the Discord community, but want that playlist, we have to verify that you're really a subscriber to the software.
I see.
We'll share the private playlist with you, though. Email help@everythingmoney.
Oh, great idea, Tim. Did you hear it? So if you're not in Discord and you're just on Patreon, email help@everythingmoney. We can get you on a list to get you that. Once we verify your membership, we can get you on that list to get you those videos that we're now doing. So, wow, Paul, just like that, 55 minutes just smoked by.
I think one of the other things is, we like having these regular conversations with people as opposed to doing individual stock requests, because for how much some people pay us for the stock request, you just buy the software and you can do it on your own all the time.
You do it by yourself. That was the point.
Yeah. So, when we created this, guys, this has gone better than we expected so far, but it's not hitting its potential yet. We only have 92,500 subscribers. We're going to get to 1 million here within 2 years. My guess is by the end of 2023, we'll be at 1 million subscribers. And by then, we're going to be doing things a lot different. We're going to have a lot more data because our revenue will be a lot higher. Our expenses are going to go faster than our revenue probably for a while because of data feed. Data is everything. We spend between developers and data feed every month, we spend about $40,000 to $45,000 a month right now, just between those two things. It's a lot of money, but guess what? I love it because I think the software is great and it's providing immense value for a lot of people. Guys, I always tell people, if you're 30 years old and you're saving for retirement, you get 1% extra a year. We're talking about millions of dollars potentially in difference in retirement.
It's probably just a couple decisions a year.
Yep.
Not buying a meme stock.
Yeah.
Investing in a value invest into a company.
You don't need to find the 10 bagger. You need to avoid the 80% drop.
Yeah.
Avoid the crap ones. Find the ones that just grow slow and steady, and you'll do very, very well.
Paul, there has been a lot of chat. Will you do a once over? Tesla to 1100. Oh, will you do a once over on TAP? A lot of people have asked about TAP.
Well, we just did a video of it.
I think it got smashed recently, Paul.
Didn't we just do a video of it, Tim?
Yes. Last
Wilson Coors.
Thursday.
Yeah.
Thursday, I think we did one.
Okay, so it was. We did it on the live stream.
Oh, we did?
So give him a once over. TAP was $52 in August. It's now down to $43.
I actually like it. You do. It's five of the 8 pillars are X's. But I like the multiple. Look at this multiple. 5-year price of free cash flow, 7.26. 5-year PE, 12.8. Revenue growth, slightly there, a little declining, but now it's building back up. I think it had to do with COVID, because who do they sell a lot to, right? And 2 years of losses, I think, because of COVID. Shares outstanding, slightly increasing, not bad. Their cash flow took a hit, but not even that bad. I actually like it, and I'm selling puts on it right now. I have puts on it right now. It's, I think, $40. I just think to myself, look at the brands they have, guys. It's
Endless.
insane.
It's endless.
Blue Moon, Coors, Miller. I don't know what Vizzy is. Topo Chico. Look at that.
It's a hard seltzer.
Amstel, Dos Equis. Corona in Central Europe. I just like the brands. I look at this going, guys, are these brands going away? No. So I can buy a very established business for 7 years of the 5-year free cash flow. I'm a buyer. I like it. That's my opinion on it.
Coors?
Yes. To me, if I found 20 or 30 or 40 companies like this that had these metrics, that had this portfolio of businesses in it, I would buy it. I'd buy all 30 or 40 or companies of them. That's the way I look at every investment I make. Would I buy this if I could have 40 of these companies like this, would I buy it? The answer, if that was my only thing, yes, I would do that.
SL is asking about Store Capital. It's a REIT. Paul, what are your thoughts? Are we going to become specialists on REITs moving forward?
So REITs are very different because they involve a lot of depreciation. So looking at their earnings alone is a little confusing. And I'd want to see their depreciation schedules. It's a little more than I want to do even me, who's a quote unquote real estate expert, I just prefer to buy real estate, which we're going to do a lot of for our subscribers, for our software. But I don't like to do the REITs just because of that depreciation issue. It's like, to explain it, go do more research. It's just a little confusing.
If you guys stay with us, I mean, we have discussed our long-term play on this show. Like we're envisioning like 10, 20 years out. I know it's weird to say, but when it's time to buy real estate, and Paul walks you through a real estate deal, your face will melt about how fast this guy can look at a property and fall in or out in love with it. It'll save you so much time if you're ever interested in real estate. And in the end, Mo, that's why I said I was upset, because I did not do the little things to get ready for a trade like Tesla. I was not ready on my engulfing candlesticks, and I could have been ready, but I wasn't learning when it wasn't the time. I wasn't learning when it was just like a boring time in my life. I could have been ready for that 13% jump yesterday. I was ready.
Yeah.
And I did make it. Go ahead, Mo.
The point of all of this is arm yourself with the right tools that when you need to use them, you can use them. That's what this whole learning process is about.
Tim, what'd you have to say?
We should do deal of the week, even if it's for patron only.
Oh, deal of the week for Patreon only?
Deal of the week.
Yeah.
Bring back the theme song, all of it.
All right.
Yep, guys, we're going to keep bringing you more of that exclusive content, so join us for the live streams on Thursday at 2. You will be getting more videos from us instead of the live stream. Thursdays at 2 will be your exclusive community-only live stream, and we will keep up the videos on a daily basis that Paul, myself, and Mo are pumping out to you guys. And this week, again, more videos on our thoughts on Tesla, Intel, Beyond Meat, Snapchat, Ambev, the Brazilian company. We talk about Lockheed Martin and its fall yesterday. All of that will be coming out very soon, along with all that exclusive content you're getting in the community. What do you think, Paul?
Guys, thanks for the last ever. It was a very successful last ever Tuesday live stream for the public, for everybody on YouTube. It'll be it'll be private from now on, and I love that because I really want to grow. I want to grow the value to our subscribers who give us their hard-earned money every single month to make our software better. And it's only going to get better and better. We've had growth every single month. It's been awesome. And guys, we're going to be millions of subscribers here. And as of right now, Social Blade has us in 5.5 years at 4 million subscribers for the channel. So at that pace, we'll have 200,000, 250,000 subscribers to our software. Can you imagine having 200,000 people who pay us every single month for the software? Imagine how incredible our software would be.
Pretty dope.
Yep.
All right, guys. Thanks very much.
See y'all.
That's our take. Final thumbs up on the way out, and we will see you on the other videos. Thanks for watching, guys. We appreciate the support.